back again on the Money Corner, and we're talking about tax time, tax preparation, income tax time. My guests, on my right, Victor Illonardo of Ridgefield, New Jersey, CPA, member of the State Society of CPAs, formerly chairman of the accounting department at St. Peter's University, and a friend of mine. And on his right, David Millstein, who is a partner, full partner, in the prestigious nationally known national firm of Coopers & Lybrand, one of the big eight. David, welcome. Vic, welcome. Thank you for being back with me again. We've been trying to get into this thing of tax planning and how tax planning helps ultimately minimize taxes or hopefully save people money. David, last week you were saying that your relationships with clients are now on a continuing basis where you're in effect as much of a consultant and a participant in the strategy that goes into taxes to make people more efficient in terms of how they make money and how they pay taxes, or in some cases economize on taxes.
Yes, Phil, it's very important for us to get involved in the planning stage. When you think that a transaction which gives a profit from that transaction, which could be taxed anywhere from 20 up to 50% at the federal level, not considering what state taxes may be on that, you are dealing with individuals who could be giving half of the money, up to half the money, to Uncle Sam. And if there are ways within the Internal Revenue Code to rearrange that transaction, restructure it, or plan beforehand to either reduce that tax bite currently or to defer it to succeeding years and get use of the money, dollars are saved by our clients and benefit is obtained.
Yeah, I find some ironies here. You speak to the average person. There's a lot of resentment in terms of the people who can beat the government on taxes, tax loopholes and everything else. Yet as I get out to professional seminars and professional conferences, I hear astute people, colleagues of yours, lecture in terms of tax advantages which really are not only advantageous but should be done. And I'll illustrate that. I went to a conference in NYU last week, and there was a man from one of the big eight who was talking about the fact that if you have stock and you give the stock as a gift, as opposed to putting it in your estate, and the stock has a very low cost basis, there's a significant difference in terms of the tax implication.
Yeah.
Now, most people really don't know that,
Yeah.
and I may not have explained that.
Yeah, but the way we try to, like as far as Dave's firm is concerned, and correct me if I'm wrong, they do have their clients on an ongoing basis because many of your tax clients may be part of your corporate clients also. Mm-hmm. So that what we have, as far as the smaller CPA is concerned, he makes up his tax return and then he tries to get them in on a tax planning basis, okay? What we try to do is with newsletter, when the tax laws change, we communicate with them. If we see that an individual needs some tax planning, we would probably send out a letter to him and indicate to him that it would be advisable if they would seek out tax planning, either with their attorney or with our firm.
I've seen your newsletter, and I know what you mean by tax planning, but it seems to me in many ways as people, and most people, many people in America are moving up into higher brackets.
They certainly are.
Either because of inflation or two income earners, or we're becoming a more prosperous society in many ways, recognizing unemployment, recession, and everything else. But in many cases, it's not only tax planning, but it's venturing out into new investments in order to get tax benefits. Mm-hmm. And the accountant can be instrumental in encouraging or pushing out into that new investment area.
But again, I think the critical point is that taxes can become can take away a very large portion of available cash that people otherwise might have use of. And it's critical to get involved in the planning stage, whether it's through the newsletters, as far as informing the individuals, or whether it's through ongoing contact with those individuals.
Okay, fellas, hold it for just a moment. We're going to pause for an announcement. We'll be back with you in a very short period of time. Stay with us, please. Thank you for staying with us. My guests tonight on the Money Corner and next week as well are Victor Illonardo on my right, a CPA who lives in Leonia and practices in Ridgefield, David Millstein, who lives in Fort Lee and practices with Coopers & Lybrand. He's a partner there in Newark office of Coopers & Lybrand. Dave, I want to come back to something you were just talking about. You start saying that the accountant is a partner in the planning process.
Should be.
Okay. Now, Vic and Dave both, before he becomes that, a high degree of trust develops between the client and the accountant, where the client tunes in and relies on the accountant's expertise and his ability to walk through this maze and complexity of tax law. This is a building process that comes about over time.
I think that's a very astute point, Phil. You're dealing with people, they are, so to speak, bearing their souls as to you. You will get to know their family relationship through their tax return. You get to know their aspirations, their hopes.
You know their behavior patterns
as
in
well
terms
as
of spending
patterns,
money.
Surely.
And you see, in quotation marks, neurotic behavior patterns, and you see silly things, and you also see very astute business
And you'll
decisions.
see a lot of mistakes they may have made also, which very few people may know about, which are reflected on the tax return.
And you cannot make, you can only suggest, tax planning to minimize taxes, but sometimes individuals will not heed your recommendations because of other social or economic reasons.
Yet, Vic,
Transferring funds to the children, the individuals may not be in a position or feel secured enough to do it at the particular time, although it may be a very good idea to do it.
Yet, Vic, I've met people who you work with professionally, and I know when they've come to me, they have said, well, we have to get in A, B, C, D, E. We have to get into an IRA, we have to get into a KEHO, we have to get into custodian accounts for our children, because Mr. Illonardo said this is something that we need now. So this is a way in which the accountant starts guiding and structuring. He's establishing a structure to make the return more efficient, more productive, or save money.
But I think that's what Dave has said. Individuals have worked so hard to accumulate whatever wealth they may have. And it is one of our responsibilities to see how they can preserve that and to direct those monies or that wealth to what their intention is.
Do both of you find that this whole educational process that you have with clients, you put a lot of energy into that process?
Well, sure, you're dealing with human beings that have different needs and different wants and different situations.
I find it very, very interesting. The profession to me is as exciting as I'm sure as to Vic and most of us in it. You're dealing on a technical basis. You are bringing to bear the expertise and experiences you've had, but yet you're still selling. And you are selling to the individual that you're dealing with confidence in your abilities.
Yeah, I think that's a good word.
And I just find that very rewarding when the suggestions you do make are taken up by the clients, and you see the benefits that they do obtain from that.
So Dave, in effect then, what it really comes down to, the accountant as a professional, Dave and Vic both, the accountant as a professional is not only filling in all the squares on the tax return, but you're really walking your clients out in new waters that you know will produce a beneficial result for them, but in many cases they've never had any experience with those kind of waters. The most you can do is to direct them to a specific opportunity that will have impact on their taxes, and then hope that they'll follow your direction. I guess that's a summation of the accountant as an advisor. We'll continue next week with additional insights in terms of how you can be more effective in working your tax planning with David Millstein of Cooper's Library and Victor Illonardo of the Victor Illonardo Company. Be with us then and have a good weekend.